The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. So this is the Tiger Technicians Hour, Technical Friday, where we look at the Chapman wave in greater detail. Always get these emails of people doing different things with the Chapman wave, the different trades. So let's just do this. You remember about 2 weeks ago, I was looking at this pattern. I said, and I drew, you can't see it very well, but I'm not going to make any changes. It's there. You see this dashed line comes down, then it goes up. And then it comes down, it goes up, it comes down. This is the Dow. This is the pattern that I said coming out of a long-term, and that means from the December 26th low to around about third week of February, I'm sorry, beginning of March, there was this huge run-up, and that run-up said, many of the indices and stocks that had performed in this particular manner had reached a level within this, it's like, almost like a glass tube that you're holding at an angle, and that angle says that at a certain point the base, not the top keeps acting as a resistance, and the base keeps acting as support, and it keeps, it's almost like a sawtooth wave on the way up, but once it breaks that key support level, other things can happen. What are the other things? What normally happens, if it's just a straight up move, I call it the Eiffel Tower, where you've got three bars that are just, it's like the futures market. At 8:30 in the morning, there's this great news comes out, and the futures just spiral up, and they go like single leg A to the upside, no peaks, and then all of a sudden they turn around, and then they give back a third, then they give back a half, and then they can even give back either almost all of it, or about 5/8, maybe a little more, and then they can start the real day. Well, this is different. What happens is there's a pattern. This is just by observation. I haven't done the study because I'm sure some people have done some kind of studies like it, but I'm just doing a visual study by memory because I've seen it since 1986. I remember seeing the very first one, and it just kept going. I used to hand chart at that particular point, and the darn thing just kept going. And I couldn't believe it. And eventually when it broke down by coming out of that up channel base, that base of support, in this case, that pink line, and then starting, so let me just show you this right here. You've got this picture right here as it is now. But basically what we were looking at this channel. Now squeeze it. You see this channel with the pink line and the green line? I should make it nice and thick and blue or something. You can see it. But you can see what happened. It wasn't just a little bounce. It went from 21,712 to the 200-period moving average and then just a tad higher and pulled back under it. It went way above it, pulled back, hit the 14-period moving average for the first time since it broke out on the 3rd of January. And then it went right back to the top of the channel. It kept hugging it, and then it went sideways and pulled back. And then my theory is that, based on my memory, what happens is it starts a very choppy, lower lows and lower highs, lower lows and lower highs. Just think of it that way. In fact, you can even think that in some way it'll start the progression of a down channel, and that down channel is quite important. And if you look at it this way, here's the support level. Also, I've got the plumb line from the high of 25th of Feb at 26,241. Got the plumb line from the left. This candle I chose here on the 12th of February, huge green candle. I chose the base and I chose the top, and I put in the trend line. It made itself. It came from these particular lows right here, and it just missed. Normally, I like to draw the channel. Sorry, I like to draw the base, this plumb line, so that you can get an action towards this target support line right here, this pink support line. So I would have taken it from this particular candle called the Chapman Wave Silent Doji, one that occurs after a top or after a bottom, either one bar before, one bar after it. I just kept this because I didn't want to make it too fussy. Normally I would have gone like that. I would have gone like that to this bar right here. That means I extend this to one more bar, and that one more bar goes to Monday. And it says by Monday, the bottom of this candle is absolutely sacred at 25,152. You take that out, not only is that negative, but that 200-period exponential moving average in the daily, the orange line at 24,909, that's like a magnet. It'll get there somehow, not straight away, but it should get there. Technical Friday. I wanted to go through this, and the reason why, as always, when we're getting something that could pertain to a top, in the Chapman Wave methodology, subscribers know for years and years, actually is now coming into the second decade, that when I get to the D, E, F, or G, if I've got technical signs that say that there's going to be a pullback, we go short. Well, so we've been short for a while. And now what we're looking at, and I say to subscribers and for our various short positions, I said, today's the day where you might want to take something off. I see lower prices to come. A 10% gain in an index on the downside since the low that was made the 24th or 26th of December to the spectacular 20-something% gain, or it depends on what index you're looking at. 10% down is really fantastic. Take it. Don't be upset. Don't be greedy. You take it. We'll keep the rest. It's just taking off some. To reward yourself for being in this position, looking at it and saying, technically, this is the day that there should be some kind of cushion of support attempt. That's all. It's not a big deal. So if it plunges from here down another 300 points, you've still got your big chunk of short position. You've taken something of good money management. There's another way to do it, and that's to be really aggressive and say, we haven't even made a crossover from the 9-period to the 14-period moving averages. If that occurs today and holds into the close, there's a real good chance we've got some kind of a technical confirmation. We're already in a sell mode based on the Chapman Wave methodology of the MACD and the stochastic, but that would hint strongly that the stochastic, which is now at 35%, I can't believe it, was it 30? Wasn't it just yesterday? It was a 61%, I think. Oh, anyway, 35%. Well, that's because it's a look back, right? And we've had so many red days, red candle days, that look back is now accelerating to the downside. And that's saying we're getting to some kind of a position where there could be a balance. And look at the unbalanced volume at the lows here. There could be some kind of a balance. That's what I'm saying. So the technical factors are that if we close and the 9-period closes under the 14-period, that's the first sign that you've crossed negative since right there, the 10th of January. But in fact, the price went above the 14-period and the 9-period moving average on the 3rd and the 4th. Okay, so this takes something off. That's all I said. I think it's a good idea. Now I wanted to say, but if you are aggressive, then probably, and I didn't want to be aggressive, I'd say, hey, this is not where you want to take anything off. In fact, we want to add another chunk. That's a different kind of a trader. That's a different position altogether. It's not for my subscribers at this time. So we're looking at this 25,000 low today, 25,252.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So the work I just did applies virtually to almost all the different indices, the key indices I'm saying. That's number one. Number two is I had a question. That wasn't a question. It was a statement about Head and Shoulders top. So let me just see. I just don't see that. I mean, let's see. Where did it go? I don't know where it went. So somewhere in there, I'll try to find the exact. It was a statement. It wasn't a question. Yeah, there it is. Okay. Will you be talking about the Head and Shoulders top in the market on your show today? I doubt it. Oh my! It says your pride is bigger than your head. This truly may be the short of our lifetime. This is the repeated one. So, you know, I don't know. Look, hey, mister, I'm getting a little tired of that. If you have something to say, make it a technical question. I don't need any. At my stage and my age, it doesn't matter what you say. It makes no difference to me. I've lived my life the way I am. So just lay off the stupid stuff. It just speaks more to your dumbness in the question. But the question itself that I am going to answer, which is a question which you might be seeing and I don't, which is what I will respect, not the other words, is that Head and Shoulders pattern. Head and Shoulders pattern, I don't see any Head and Shoulders pattern here. There's just the Chapman wave arch formation. That's all I see. So that's, I don't see it. I don't know what you're talking about. Let's see, QQQ, maybe that's what you're talking about. Nope, not in the Qs, not in the IWM. Not yet. It could bounce and then make it, but so far there isn't anything that, yeah, maybe the IWM has a little bit of a Head and Shoulders. It's already broken the neckline. It's just a horrible pattern. I never like it because by the time you recognize it, it's already too late. I have other techniques that I believe are get the edge rather than the Head and Shoulders. So well, let's just, okay, I hope I answered that. I shouldn't have wasted as much time as I did on that question. All right, next thing is questions about, so question about Vive, which is Viva Technologies. And the question was, the patterns that we're looking at here, so this is the D in Viva, it's trading at 113.38. It is down 40 cents. Wonderful peak D in the, no, leg D in the monthly chart with a whole month to go to see if it breaks above that 120, almost 125 level. And so this is an issue here, Viva Systems cloud-based business solutions, because you've got this long-legged doji, and so far it's Friday, and this is the candle that I'm looking at. In my work, a close below a long-legged doji says that if there's a close below the low, the wick, that is the shadow, of 113.84 in this case for the weekly chart, and we're trading at 113.38. So far we're under it, would suggest that the candle wick, the entry and the exit, that is the open and close of last week at about 120, is really strong resistance. In fact, it's probably a little lower than that. It's probably at 100, we're at 113.30. It's probably 115.30 to 116.10. That's very strong resistance, and that's not a good sign. But the MACD and stochastic in the weekly chart are still pretty good. It is a leg D, so we've got to be careful. Now what we got, you remember the zigzag pattern that I drew here? We've followed that pattern very nicely. And the other question that pertained to this is, where would it be a short again? You know, I had said before, I don't think this is really a short. I'd rather be looking at this to say, where would I like to buy it again? I don't want to mix my mind up in a different framework. So in this case, yes, the daily's in a sell mode. Yes, the MACD is very weak. Yes, the stochastic's down at 20%. Yes, the unbalanced volume is very poor. But I just don't see it as a short. And that's not to say it couldn't give you a nice percentage. I mean, let's face it, 124 down to 100 was the low today. Down to 110, 14 points. That's 11, 12% already on the downside. That's pretty big. I'm just saying there are stocks that look like great shorts, and there are stocks that look like I'd rather be focusing on where would I like to buy this. I think it looks really good technically. So that's what I'm saying. I don't think it's, in my work, I'm saying I'd rather be looking to buy it than to short. I think I made that clear. There are. So the next question I had was, wow, am I going to find that? I'd like to find it quickly before the break. Let me just see. No, I won't. I'll have to take the break to look for it. And yeah, Peter, thank you very much for that email on the Scientific American on the waves. I did see it. I might even have it somewhere. It's very interesting. But really what it does is it just clarifies in technical terms what Susan Carey, I believe her name was, who wrote the book that I just refer to all the time called The Wave. In fact, I reread it the other day with these incredible waves and all the work that she did. She not only did surf, eventually she was a journalist, she did surf, but I'd like maybe to contact her one of these days. I should find out if I can get her number, because she really did all the scientific work when she went to meetings and things to say that the consensus was back, the book was published just weeks before, or just a couple of months before the Japanese earthquake, and the scientific conclusion, her conclusion of what she had read and studied, was that there aren't more of the events, but all the events are much greater in magnitude than they had ever been. In other words, let's put it into context. The context is number of earthquakes, number of tsunamis, number of vicious events like the storms that we've seen, maybe here in the United States, maybe even the change in the weather patterns, are not changing the actual cycle, but they're changing the numbers so that the numbers are much greater. So that's it. Now, the next thing I wanted to say is, so yes, it was a very good article, and thank you. Yes, Susan Casey, I believe. I don't have the book. I'm actually, for once in my life, actually remembering the name of the book and the title, but I believe it's Susan Casey, and it's called The Wave. Published in 2000. When was the earthquake in Japan? It was published like 2 months before. It was so prescient. It was amazing. All right, enough with that. Let's go to the TLT. The TLT, no, it wasn't 2010, was it? Well, time flies. Maybe it was. I'll check it out. During the break, I'll have a quick look to see where I've got the book. I think I've got it in another room. So the TLT is now up 34 cents at 121.40. This is the old traditional way. Now, you can see this chart. I'd shown it a little while back. I think it was about 2 weeks ago. I said, hey, we've got this equals Chapman wave, 1-to-1 extension, parallel extension. That's like an A to B equals C to D, except The angle is exactly the same. That's the big difference here. So what we are looking at, so Dave White said, the wave in pursuit of the rogues, freaks, and giants of the ocean. Huh. Susan Casey. Is that what it was called? Maybe that's what it was called. I always call it just the wave. Anyway, yeah, I believe that's the book. And it's a fabulous book. It's a fabulous book because she talks about the waves. She talks about going with the people that did those 100-foot waves. I mean, can you imagine surfing straight down the face of a wall, the Grand Canyon, but you're on a surfboard? Can you imagine the roar? Can you imagine the noise? You cannot even imagine the sound in your ears. There's no way you can shout to someone else to say, hey, I need you. Nobody's going to hear you. All right. TLT is up 33. Now it's the old-fashioned money comes out of stocks and goes into the so-called safety of bonds. That's what we're looking at. I'll be back straight after these messages. I'll see if the name of the book is the one that Dave mentioned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Yep, that's the book. I completely forgot about that little thing at the bottom because I always look at it as the wave. Susan Casey, In Pursuit of the Rogues, Freaks, and Giants of the Ocean. Just so nicely written, and she's a participant. She's right in there. She's not just doing scientific work. She's right in there. So anyway, enough with that. And then it was published in 2010, but actually it only came out about a month or so before the earthquake in Japan, which was, it says Friday, March the 11th, 2011. Tohoku, earthquake, and tsunami. So let's look at this. TLT, which is the Lehman 20-year T-bond fund, had a fabulous move from the low of 111, was that? Yeah, 111.90. I better type that in because I talk about it all the time. 111.90, and it spirals up to the most recent high right under 124. So the exact number is 123.86. Let's just type that in. I've got it. 123.86. And, you know, so it's 12 points. It's not such a big deal, but we're talking bonds. So it is a big deal because it has to do with rates, etc. As the bonds go up, the rates come down. So my impression was that the TNX was showing that with the reports that were coming out for the Fed, there was just enough to say that it should still be a factor that they're watching closely the rates, because if perchance by themselves, without the Fed doing any raising of rates, the rates went up, it would really help them. And not only that, I'm going to get to in a moment, you want to see some kind of inflation. Otherwise, hey, we don't want to be looking at deflation where you can't raise prices because of international competition. Let's face it, you want to buy something, there's Japan, there's China, there's South Korea, there is the whole of Europe, there is India. You've got countries all over the world vying for your product, for your money, and they will give you products for that. And that's creating this commoditization of almost everything. Not only that, you've got Amazon. That's produced a commoditization of the expectation of lower prices. It's not always the case, but in your mind, you're thinking, hey, if I go to Amazon, I got a choice, I'll get the lowest price within that spectrum of choices that I will have by the various vendors. So that's going to be an issue. There's now competition, taxis, medallions. I don't even know. Does anybody know what the price of the $1 or $2 million medallion was from maybe 7 years or 8 years ago? I know here in Boston, it's declining every day. It declines. The competition is intense. There is competition for everything. So we cannot rule out the spectrum that within the whole concept of finance, that is paying for something and then paying the lowest price you can for the best quality you can get, that is out there. And that's the reason why I looked at the TNX and said, you know, if the TNX can rally some, if we can actually finally get wheat in the whole commodity area, that's the grains and the softer material, softer commodities, if we can get it hasn't done it yet, a little green candle here in leg F to the downside, I think at 440.5, it's really close to a good balance. Corn at 364.25, down 0.27, down in the trough G/C. Nothing, still red. And what did I forget? Corn, soybean. Look at this, new low. You're not getting it. So I'm thinking that if there was a way towards seeing some kind of elevation in yields very quietly, and within about 3 months, you start to see the commodities acting very well. Gold is in some way a sense of, it is a commoditization, but it's a commoditization of fear, traditional fear. You go into gold and you're a little nervous, and we would see that really explode to the upside if the XLF was trading. That's the financials, just to give a good indication of what I'd be looking at. Financials down just 11 cents at 25.86, come down quite sharply from the high 26s. No big deal yet. But if the financials start to crater and go down and close under 24 for 2 weeks in a row, I wouldn't be surprised. And if you do see gold actually moving up much higher. Now, I've said, could be completely wrong. I'm not an economist. I'm just doing this from the spectrum of my high chair at my desk. And I'm saying, what if the dollar is huge money? That is, countries that are using the dollar because they see it as a some kind of a safety haven for themselves? What if bonds now are on a separate trajectory? They are the traditional safe haven, but I think that the rates are going to be stuck in a range for a while longer. Later on, we've got to be really fearful that we don't do a Zimbabwe and we got the markets screaming to the upside with commodities and everything going crazy. Just let's forget about that scenario. But I'm thinking we've got 3 or 4 different sectors entirely. You've got, look at the euro. Give me a break. Euro is making new lows here. Well, it's having a nice day today, but it made a new low. That's just not a great looking chart. It's going to have a lot of work to get from 1.123 right now up into the 1.145, 1.50, 1.15 area over the next 3-4 months. I think that will make a change. So I think we're looking at separate things entirely. Even the yen, which should be in line, more in line with the dollar, is really just kind of, it's doing okay. But it's got this peak D from just over 112, trading at 111 right now. It's just kind of stuck in a range. So this, I think, is what we're looking at. We're looking at commodities and gold. I'm going to include oil at this particular time because if oil breaks under, it's at 55.28. If it breaks under 53 in the next 2 weeks, that's going to not be a good sign. But if it starts to show some kind of demand, I'm looking at it only as a demand factor. If it shows demand and suddenly it's trading, what are we now? We just started March. Let's just say April the 15th to April the 30th. If crude oil is even able to touch 58.5, maybe 59, I think that would be a good economic sign. So here I am. I'm just trying to put the whole smorgasbord together. Let's go back to what we were looking at for this SMHs. SMHs, nice green candle for a change today, but didn't make a lower low. Hit my target of the 99s. It should have a little bit of a bounce, I think, from the 99.04 low this morning, trading at 100.40. Nice green candle, still below yesterday's close. But I wouldn't be surprised if I could now draw in. I could either stretch the arch formation or I could draw in a mini arch right here and say, you know what, the semiconductor ETF could rally to the 102.30 area and then start to come back down again. That weekly chart, technicals are still strong in many of the charts. So it's saying that the 100 to 97s is kind of good support for the SMHs. But yeah, this is another commoditization. And it's individual stocks that were holding this up. And now it's starting to pull back from 106 to 99. That's only 7 points, but that's a quick 7 points when you think of how it went up. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, so we're looking at, as I say, the SMHs, I think, excuse me, they need more consolidation. And as I said, on a purely fundamental level, I believe that they haven't had the bookings like they had before. They're still very, very weak, but the price is the price. And I'm dealing with the price, and I do think that the 98.30 200-period exponential moving average, that's the big test for it. Starts to close under that next week for 2 sessions out of 3, and that'll say, hey, that monthly now is starting, that weekly is starting to become vulnerable. A power move above 103.50 would say, you know what? Not yet, baby. This is still holding nicely. Questions I got. Let's see. Got a number. Oh, got quite a few here. Hi, Basil. Ignore them. What is this? Ignore. Oh, pesky emails. No, I only get one pesky email. No reason to acknowledge that correspondence your show has value and excuse experience. I appreciate that, but I always think that sometimes people aren't able to express what they want very easily. So it's really, that's what I'm looking for. It's not the other stuff, the personal stuff. It's just, who cares? So the next thing we're looking at is, a question in the den about MJ, which is this is the marijuana alternative harvest ETF cannabis sector, made a peak E at 37.65 on the 6th. Let me just put that in, 37.65 on the 6th, so that's 3/6/19. Make that red because we're in a sell mode in the daily. And Mike, this is very difficult for me because we've been long for a little while. It's acted very well. Oh, that's not a C. Is that a C? Let me see. I think that was parallel. 37, it is. So that's a peak C, peak D, peak E in the Chapman wave methodology. Now we're starting to pull back. Well, the thing was this. We did take some profits, but I just wasn't sure whether I really want you up, and I can put that as a down arrow, whether I wanted to say, let's get out of this, because I think it is still the sexy area to be. I think it is an area of growth, more than in one way. I mean, just right now, they're talking about here in Boston, in Brookline, they're about to open, on Washington Street, they're about to open a new dispensary, whatever you call them. So they are going to have people lined up for about a mile, probably from Brooklyn to Newton, where I live. Well, there's one just down here, so maybe not Newton. But they're going to have people just lining in line. And I still believe, I think you have to pay cash. I might be wrong, I don't know. But I think you still have to pay cash because of the whole thing with the Fed. So people seem to have cash. So this is going to be very interesting because this is a growth area for sure. So do we want to get out? We got in nicely. We had really good profits, took some. I don't want to give back all the profits, but at the same time, I think this is an area that has the potential even after a pullback, to come right back and go to the high of 45.40 that was made back in September of last year. That's just my thinking. Maybe I'll change my mind, but I'm looking at it and I'm saying it's going to act just like the market. From yesterday's action, I said, yeah, that's it. It's going to act just like the market. So let's just see what happens. I'll deal with that. So the question there is, where would you get in? I'd say hold off for now. The 33 to 31 area, it's at 35.41. That's going to be very important. Breaks 31 support. I think it's a real problem. You don't want to give back too much of your gains. So let's just deal over the weekend. I'll do a little bit more work on the individual companies. Yep, that's it. So another question here is KFY. KFY, do I know? Oh, KFY staffing. So KFY is Corn Ferry, trading at 43.56, made a high recently just over 49. It's trading down. Today's low was 42.54. Yeah, this is a problem. This is a problem. So let's look at RHI. RHI, Robert Half, we're ready to go. Made a peak D in the Chapman wave, a 2-bar reversal, Chapman wave 2-bar reversal back on the, just as March was coming in. It goes to, oh, was that 69 round number high? So the day before is 69 round number, and on the 28th of Feb, and on the 1st of March, it goes to 69.01. Ho ho, 2-bar reversal, 69.01, pulls back. So it's a little bit worse. You remember the MJ chart? Look at this one. This is a strong down candle instead of green today. Yes, look at the monthly. This is serious stuff. So I was reading something in the paper today about the young people and the whole thing that they throughout the world, you've got, must be about 12 different countries where the students have taken off a school day and now are taking off one a weekend. I think in England, something like that, like they can really afford to take one a week. Maybe they can. And they're talking about all these different things. And one of the things they say is there's no growth for us. There's been no wage increase. There's been no job increase. What are they talking about? These are the lowest levels we've seen in 60 years. No matter how whatever politics you, whatever your bent is, you can't deny the fact that even if you're Harvard, it's still one of the better ones that we've seen in a long time in terms of jobs. So I don't know what's going on here. Robert Half gets halfway. It goes from the 80 level down to the 54s, 200-period moving average on the weekly, and then has a bounce to most recent now of 69, and now it's back at 63. This is a problem, and this is something that I don't want to mess around with, and that's the reason why I'm saying that for our short positions, and what we've done for the long positions is we've raised the stops. We're just getting out, raising cash as we can. One or two things we'd like to keep, but at the same time, I'm looking at this and I'm saying that move up from December in all the different stocks and indices, there was an aberrational aspect to it, and it wasn't a generational aspect, and like you'd got in 2009. Who was the guy down in Florida who called it a generational low, and then he got out way too early? Brilliant call, and then he just got out. I can't remember what his name is. No, this, I think, here, the low that was made was a low that was based on a purely technical basis, and it got exacerbated to the downside, and the V-shaped recovery in some areas went to new highs, but almost about 80% didn't make new highs, and at least, I'm just guessing, 40 to 50% are like Robert Half. They've made it, didn't quite make 50%, and now are under it. This to me is something, I'm not ignoring this decline, because this decline was the last 1,000 points on the way up was really for the Dow was just based on hot air. Now that air is kind of dissipated, and now you've seen the 1,000-point pullback. So I'm not taking this lightly. I think we've got a bit of a way to go. I'm just saying I don't think we're going back to the December lows. I think we have, on a worst-case basis, a 50% retracement, but on a best-case basis, let me just do this because I keep getting questions. Yep, more questions on it, where we're going. And my contention is that the whole area of 24,600 to 24,000 on the Dow, kind of a halfway marker between the low and the high, the recent high, I think that's going to be really good support. Based on the technicals thus far, look, 92% still in the weekly chart. On the stochastic of the weekly chart, the MACD is still good. I'll be back. Basil Chapman, longest segment coming up. Dow's down 175.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or Primal for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. So, yeah, we've got another bout of selling coming in. We're down 186 and down minus 25. Hey, before I forget, a little white light there. A good friend of mine, his son is involved in the landing of the SpaceX craft. That's going to be the big test. That's where they're very, very anxious, and hopefully everything works out just fine. Isn't that remarkable? I mean, what an age we're in. A lot of people keep saying, what a terrible period we're in. For some people, obviously, it's a terrible period. But what an age. I mean, the medical... I'm alive because of medicine, modern medicine. All these different things, it's just incredible. What we do with it is another thing, but isn't it a man and woman's ingenuity is just remarkable. Inspiration, that's what it is. So, well, let's get to the nitty-gritties. The VIX is in. We'll do this real quickly. I don't want to run out of time like I did yesterday. First of all, let me just say have a wonderful weekend. Check out my opening call, my daily newsletter. That's... hopefully profitable and very, a lot of advice, a lot of discussion on the technicals, especially the Chapman wave methodology, a lot of proprietary techniques, and the VIX is at 17.81. In the teens, especially going from the 16s to the 17s, expect triple-digit Dow declines and sharp double-digit S&P. So how this closes is going to be really important even for Monday, unless over the weekend they just decide to do some Chinese, some favorable, whatever the news is. Okay, we don't know what it's going to be. But in the meantime, keep that in mind. In the 70s, you've got to be careful. Any pullback that says it goes down to the 17.30s is fine. You already want to see the low 16s to the 15s to have some comfort. VIX is really important. It's saying that there's a lot of buying here of insurance as well as position playing. So keep that in mind. Once you get to the 17s, you have to expect triple-digit down closes in the Dow, especially if it's the high of the day or near the high of the day. So keep that in mind. In the meantime, back at the ranch, on the plus side, if you're looking at stocks to buy, just have patience. As we've been saying all the time, just have a little patience. You're going to get beautiful entries on some stocks you've been waiting a long time to get. Don't get carried away. This is just a market, and it's on the trend. The tide has turned to the downside. Have patience until we get to low tide. I'll be back on Monday. Have a great day. Check out my opening call. Stay tuned for Steve, Dave, and Tom. Have a good weekend.